You good? All right, guys. Allow me to introduce you, Georgy Sokolov, right? Am I right? Georgy, this is yours. Have a double check if it's working. It's a great pleasure to have Georgy here with us today. Wirex is an official sponsor of NapulETH. For us, it's a great pleasure because, as I was telling before, thanks to these guys, we can do this kind of events. So I want to say thank you from me, from the NapulETH team, for being here to talk about blockchain technology, to talk about solutions in order to continue to grow and to continue to scale to mass adoption. Georgy is the co-founder and the VP B2B at Wirex, a digital payment solution platform that is serving more than 6 million users in 130 countries. With 15 years of experience in business and BD and 20 billions in proceed transactions, Georgy leads Wirex Global Strategic Partnership and push towards seamless blockchain-based payments. He's going to talk about are blockchain payments ready for mass adoption? Georgy will explore the current state of on-chain payments where real-world implementation is already underway and what barriers we still have today. So expect insights from Wirex journey as a principal Visa partner and MasterCard member that are reshaping the payment landscape. A big applause for Georgy.
Thank you. Yeah, that's quite a presentation. Right, we will start with a quote from Bitcoin white paper, effectively a Bible of this industry to a degree. Just as a reminder, right? If we were at some at an Ethereum conference, it feels easier because quite a lot of people at Ethereum-focused conferences are focusing on building something, whereas when you come to other types of conferences, let's not name the ecosystems. So just as a reminder, this industry started good 10, 15 years ago for a good reason, right? The initial idea was to make payments between people decentralized and free, right? So that the people don't have to rely on any intermediaries to make payments between each other. It's not about another shitcoin, another meme coin. It's not about pumping, dumping. It's not about just making the next 10x. It's actually about bringing some utility and improving the financial system as we see it. So this has been the vision for a good number of years, and the vision was and still is quite ambitious, right? So this technology enables instant, cheap, and borderless payments. It has quite disruptive potential around many areas of finance, but for some reason, we, for example, at Wirex, we started 10 years ago enabling blockchain payments in the real world. And still today, like how many people here use cryptocurrency for daily payments? 2. So, and that's quite a crypto savvy audience, right? We're not at a McDonald's conference, we're at a crypto conference. So people here know what they're doing, and still we see that it's still far from adoption, from mass adoption at least. It's been a bumpy road here, right? So firstly, mostly speculative use cases in this whole industry, and tech historically has been lagging far behind the hype. The technology is only now getting to a stage when it's actually ready for mass market, but the hype around it, we've seen, what, 3, 4 big bull runs and crypto winters as follows. Stable coins, which are the main enabler at the moment for this on-chain payment world, they have not been without controversies, right? Realistically, although first stable coins came about a good 10 years ago, it really became a buzzword only recently. And I would argue that what enabled stable coins to become a thing, historically, they've all been about just means of exchange on a crypto exchange, right? When you're trading and you need to wait for the currency to appreciate, you just swap into stable coins, right? What made them shine was the development of technology combined with the increasing interest rate requirements, increasing interest rates environment. Because historically they had the product market fit from day one, but they never had the business model, right? How do we make money of a stable coin? And that's why we had all those questions around USDT and where Terra was generating the interest from. And even USDC had its DPEG events and all that, because there was simply no way for them to earn money. And then when interest rates started going up, those businesses all of a sudden became not just profitable, but some of the most profitable business in the world, especially if you count for the number of employees. Like Tether, what was it, last year, this year, their profit is comparable to profit of JP Morgan, and they have 10,000 times less people working for them, right? So it's a super efficient business. And last but not least, why it's stable coins that are important for the payment use case. When we started 10 years ago, the idea was to enable people to buy coffee with Bitcoin. And although we made it possible, people don't do it. Like no one buys coffee with Bitcoin. There's a very small use case for people to actually spend the currencies like Ethereum, Bitcoin, Solana, whatever, when you get paid in this currency, or you mine Bitcoin and you have real world expenses to pay. But otherwise, people either spend fiat or stable coins. And latest developments over the last year and a half, there's been quite some significant things happening. So major payment networks start not only talking about them, they start really implementing them. The biggest catalyst this year was the acquisition of a company called Bridge by Stripe for $1 billion and 1.2 billion, I think, and it's like a 2-year-old company with virtually nothing, like a couple of quite basic products. And that's when the stablecoin actually became a buzzword, because people suddenly learned that not only the DGens are using them, but actually Starlink is using stablecoins to accept payments across the different geographies, because it makes sense, because it's just easier, faster, cheaper, and better. Then technological advancements, they've been improving the usability. 10 years ago when we started, it was impossible to do anything on-chain. We had to build a custodial solution because the speed of blockchain transactions was simply not comparable to 50 or to 100 millisecond window of Visa or MasterCard confirmation of transaction. Now with fast L2s, with fast L1s, it's becoming possible. Regulatory momentum is catching up. In the previous talk, we heard about the Genius Act and then MiCA and all of that. So it's becoming legal, and not only crypto companies are starting to go public, many of them are starting to apply for banking licenses. And last but not least, and this is not information from CoinMarketCap, this is actually from Visa's own website. Last year was much smaller volumes than this year, stablecoin volumes already surpassed the volumes on Visa and MasterCard networks. Of course, it's not comparing oranges to oranges, because in case of Visa and MasterCard, we're talking many millions or billions of small retail payments. In stable coins, it's mostly about settlements, hedge funds, high frequency trading. So it's not really like for like. Nevertheless, 10 years ago, this would have been unimaginable. So what are the actual use cases? I would argue that the biggest one is cross-border payments and remittances, because that's where the biggest frictions are. Like us living in the developed first world countries, you may think, why do you need it? We've got SEPA Instant already. Why do you need stable coins? But try sending money from even a European country to another European country, which is not part of SEPA. And I'm not talking about sending it to, I don't know, Argentina or Indonesia, etc. That's where all the frictions come in. That's where payments still take 5 days to a week, cost you $50 to send $10. It's very inefficient. B2B payments and treasury management, as I mentioned, turns out that Starlink was using it for quite a while now, and more companies are starting to implement stablecoins in their day-to-day business payments and treasury. Payroll and contractor, with the world becoming more decentralized and more remote after COVID and all of that, people becoming more mobile and working from different countries, it makes sense to pay in stable coins rather than worry about. If you're a huge corporation, of course, you can pay your 50,000 employees by having a bank account in every country where your employees are located, but it's not practical for a 50-person startup. And then all the other use cases, e-commerce and retail. On e-commerce side, Shopify recently announced that they will be accepting stablecoins, USDC, by the end of the year, and this is huge. And not least, financial inclusion and accessibility. Again, to the example of first world countries, no one needs it here, but for people who are unbanked, underbanked, in case of various war conflicts and countries going under sanctions, ordinary people suffer. And then they get cut off international banking system, their home banking system, and all of a sudden everyone finds ways and learns, and adoption happens overnight. People learn very quickly how to use USDT, USDC, P2P, and all of that. It's just when there is a problem, this becomes a solution. Still yet, realistically, as we saw, only 2 people in the audience use it for payments, right? So why? It's still complex. You still need to know how to manage your private keys, blockchain addresses, not forget it, not lose it, not lose access to your funds. Transaction fees in many cases are still quite high. Regulatory uncertainty still remains, although it's seemingly improving, but it's still, a lot of this industry is still in the gray zone, and real world usability is still limited. It's all good sending stable coins person to person, but A, where do you get them? And then B, where does the person that receives stablecoin, how do they actually spend it in the real world? So as always, as in many other industries, this first and last mile problem is the toughest. And trust, with a lot of companies failing over different market cycles, there's less and less trust. And although we don't really see massive migration to on-chain and self-custodial solutions, it's happening. What do we need to make it happen faster and to ensure that people actually start using it? Integration with existing fiat systems needs to be seamless. It cannot be difficult. Like, people spoiled by choice in the first world can't be bothered, and people spoiled by, well, not spoiled, but just like lacking basic technical education, they can't use it when it's too complex. Transactions needs to be fast and cheap, gasless ideally. If you buy a coffee for €5, you don't want to pay another 50 pence for gas fees, right? The easiest way, we think, still remains as it was 10 years ago, was to give people a convenient tool to use the same currency, which is a card. If it can be attached to a payment card, it's for now ideal. Again, not to say that cards will survive 5-10 years from now. It might all change, but for now, that's still the most accessible tool. Self-custodial solutions are not only more secure for the users because they exclude third-party risks, but they're also easier to comply with regulations because it's self-custody and you don't manage people's money. And yeah, finally, it needs to be nice UI UX that people actually like to use and are not forced to use it. There's several solutions similar to this, but I'll talk about Wirex because that's what we know best. So we've been in this space for 10 years now. 10 years ago, it was unimaginable to even have a direct conversation with Visa or MasterCard. They would not let you on the door, even via intermediaries and existing financial institutions. It was very, very difficult to find one that would actually be willing to work with crypto. And now we've been direct principal member of both MasterCard and Visa for many years now. Both MasterCard and Visa have their own crypto programs, divisions, incentive programs, etc. The solution we're talking about is based on account abstraction, where all this, not all of this complexity, but a lot of this complexity is removed from the user. So what a user needs to know, I have a wallet, and the wallet is linked to my card and to my IBAN. I don't need to know anymore as a user, and I should just be able to move funds seamlessly. It's based on ZK technology, but not only, it can be based on many other layer 2s and even layer 1s, which is fast, private, and secure. Transactions are gasless, so there's no need to pay another penny to spend your $2. Cards are accepted by all the merchants around the world, and yeah, most importantly, people want to earn rewards. So what we find interesting is we've been working on this super complex self-custodial solution, and we tell our customers and we talk to people at conferences and tell them, well, you've been using the card for many years. There's no reason not to trust us as a financial institution because we're licensed, we're a direct member of Visa, etc. But you can now have a fully self-custodial solution where you can make your day-to-day payments without relying on us as the guardian of your money. You don't have to trust your money to us. People like, oh, that's cool, self-custodial. How's it better? How's it better? Is it better cashback? So people, despite all the talks about sovereignty and all that, mostly care about cashbacks and cashbacks. So how does it work? That's how it's for us now. So let's imagine you are a crypto-savvy user who knows how to manage a self-custodial wallet. You have your stable coins in your wallet. The path to move it from your self-custodial wallet to making a payment for your coffee or bread or rental payment, whatever. You need to sign a transaction on your wallet, send it to a centralized exchange where you will be able to off-ramp it, exchange it into fiat, then send this fiat into your bank account. If you are in a location like Europe, it's fairly easy because it's SEPA, it's relatively fast. If you are not in a regional country that supports instant transactions, then it may take longer, money may get lost. We had a recent example of a company in Serbia that we paid from the UK, and a month later they still didn't have the money. It got lost, you can't trace it, it still sucks. The technology is not great. And then last not least, your bank may start asking questions, where's the money coming from? Oh, from crypto? Thank you, your account blocked. And only then you can spend it in the real world. Whereas now the tech allows it to happen this way. Your wallet, you spend it, that's it. You tap your card, on-chain transaction happens, and money gets directly from your wallet into the merchant's account, and you don't need to trust anyone with your money. How it works, there's an interoperability layer based on this ZK rollup. This smart account is linked to your Visa, MasterCard, SEPA, faster payments, other banking systems. And on the other end, it's linked to your self-custodial wallet, which you just connect like you would connect it to Uniswap, to OneInch, to any Web3 decentralized application. And that's it. You grant a smart contract a permission once. It would be very unpractical to have to confirm every transaction. So you grant a permission once, you set up the limit, let's say 500 euros I can spend per transaction or per day. You can recall this permission anytime. And the most important thing about it, so the way it works now, you have your money, you come to a bank, and then you ask a bank, please take my money to allow me to make payments in real world. And the bank will perform KYC, the bank will do this, the bank will do that. And then if they decide to freeze your money, they freeze your money, right? Because they have the right. In this case, well, fortunately, unfortunately, that depends on your perspective. Of course, you still have to do KYC because it's a real world payment instrument, but now you are the owner, not you coming to the bank and giving them your money and asking them something in return. You come to the bank and tell them, this is my wallet. If you provide me with a service that I'm happy with, I can give you limited access to my wallet to allow you to perform the payments. And if the bank, or Wirex in this case, for whatever reason needs to freeze your account, we can stop your card from working, but we cannot touch your funds because your funds are in your wallet and you control the keys. So it's like proper Web3 banking. You actually control who you give your access to, and you can recall it any moment. So slow and costly on-ramp problem is settled by global card infrastructure. Custody risks are removed because it's fully self-custodial. And now you can spend your stable coins in daily life anywhere Visa or MasterCards are accepted. Who can benefit from this technology apart from, of course, day-to-day users? So any Web3 wallet can implement their own card program. They don't need to be a regulated financial institution. They don't need to worry about KYC, about transaction monitoring. This infrastructure that we've been building for 10 years will take care of all that. On the flip side, a neobank that wants to dive into crypto can now offer crypto services to their customers and instant payments in the real world as well. Businesses can set up business accounts. It's still very difficult for crypto companies to get even simple bank accounts. Not as difficult as it was 10 years ago when we were starting, but still not very easy. And here you can get a proper bank account linked to your self-custodial wallet and corporate cards. DAOs can manage their treasury wallets and pay in the real world, and pretty much any developer who has an idea which would benefit from giving users access to real-world payment rails, it can now implement it into their products. So cards can be co-branded. And final question, are we there for the on-chain payments? And the answer is pretty much yes. So it's still a little bit clunky. It still needs to be improved, which we're working hard on. But yeah, future is coming and no one can stop it. Last but not least, for Italy, yeah, we are. It's our second conference in Italy this year. We have our VASP here. We are applying for MiCA here, so we're betting big on Italy. Historically, it's always been top 3 market for us, so very important. And yeah, we hope to see more of you as our customers. Here's some QR codes to get the information. And yeah, if we have time for questions, happy to answer questions.
Amazing. Thank you very much. Let's give a round of applause. Thank you, Georgy.